Welcome back, everybody. Sive here with forexpeacearmy.com. Let's take a look again on the cryptocurrencies as we do usually on Mondays. So on Thursday we have prepared the plan of the downside retracement and you consider possible taking long position, but the dear Donald has prepared to us a nice surprise with the 100% tariffs on China, which actually just crushed the markets across the board. I'm not speaking even in the different tokens and just major currencies such as Ethereum, Bitcoin has shown really a big collapse. So it has changed the intraday picture, and currently we have to be extra careful, not hurry up with the decision making. Let market to come down a bit, taking a look what's going on. But at the same time, such big moves usually bring a lot of opportunities in creating new patterns. Particularly speaking, let's start from the monthly chart. You already could see that the chart shows the forming of the bullish grabber. It will be confirmed only by the end of the October, so to make it real, market has to close above this red line by the end of the October. But if this will happen, grabbers suggest possible taking out of the stop of this particular pattern. So it doesn't mean that it should keep going higher, but at least some flirting around the top, moving slightly higher. That's the target of this pattern. So it might be important. Speaking in a bit wider picture, so take a look. Market mostly stands around the major resistance. Yes, it hasn't quite reached it just for some $100. But mostly you could see that all-time target is done. So actually, by the way, gold stands precisely at the same target. So our 41 cents target is the same all-time XOP target. So you can see that as a Bitcoin, as a gold market, mostly come to the same points at the same time. And forming here, this also, by the way, guys, yearly period resistance one, where the market stands right now, 122 approximately. So, and appearing of the high wave pattern here, in general, it already might be the sign that market intends to show some reaction on this major target. Obviously, this reaction should be to the downside. So here you could see that market's preparing to something. At least this is the wide range, and until market will abandon this range, we will not know the next direction. So usually when market forms the high waves, it moves next step, develops, and it moves in a direction of the breakout. So if it will break it up, then it should keep going higher, downside correspondingly to the downside. These two patterns are not mutually exclusive, so you could combine that one with the high wave. So for instance, actually market could next month just move slightly, taking out of the top and complete this target and then return it back down, and by this action actually grabber will be completed. So we will see how it will turn, but it's definitely the points that we need to keep an eye on. Now moving lower to the weekly chart. Here actually the drama of the picture relates to the potential bearish grabber that we discussed. If you remember, on Thursday we said keep an eye as market is flirting with the MACD. Here might be the bearish grabber. If it will be formed, market will drop below these lows. But happened so thanks to Danny that actually it has happened in the same candle, in the same bar. So market simultaneously has confirmed the grabber, and right at this week, or even better to say in this day, it completed its minimum target. So it dropped below these lows. Now the weekly trend stands bearish. In general, if you take a look at the performance on the weekly chart and on the performance on the daily, which probably may be even more representative, you easily could recognize a kind of the big bearish engulfing performance, especially with this minor move above the top. So obviously here the market grabs the stops and just collapsed. So this potentially looks bearish. At least with this momentum that stands right now on the back, chances that market could try to form some swing down again are not really small. So it's really might happen if, of course, Donald Trump once again will not come on Twitter and will not tell something else. For now, usually when you have this performance, in most cases it leads to appearing shape some kind of the ABCD pattern. That's why I wouldn't be hurry up with the decision making currently, and let market to come down a bit and see what will happen in the nearest few days, because its shock it's too big actually. So it's big liquidation was on the market. Moving lower, the daily trend of course also stands bearish. So for example, on the fall time frame chart, what actually could happen? If you take a look at the 2-hour chart, you could see that market now is flirting with the resistance area. It's 50% resistance. Next one will be approximately 1770, 618 resistance. I intentionally taken this point for calculation of Fib levels because mostly from this point the major downside action started. Drop was not absolutely surprising action, because if you take a look at the fall time frame chart, you could see that multiple grabbers were forming before collapse has happened. So you can see in a row, one grabber, second grabber, even the third when the breakout already started. So that has happened before the drop. So they were warning about the possible drop. But anyway, currently it's not actually important to us. What we should care about is a possible reaction of the market to resistance levels. Why these levels are important? Because if something like bearish engulfing indeed forming on a daily weekly chart, then probably somewhere around 618 level market could start action to the downside, to the extension. If somehow market will break it up and start returning back, erasing the whole thrusting action down. So if this all black nasty performance will be erased, market return back some in an area 120 to 123, that will be quite different tune. In this case, chances on upward continuation will increase. But until market stands around the 618 level and holds below it, and in general while it holds it, chances on the classical performance, such as a kind of the ABCD down, exist. So from that standpoint, if you take a look on lower time frames on the hourly chart, you could see that here we have the ABCD pattern with the target around the same 1770. So this ABCD action creates an agreement with this Fib resistance level. Second, you could see that the CD leg, it's very slow. So compared to this one, as you can see, very gradual, slow action. Usually, this type of the performance with the ABCD pattern leads to reversal at the OP. So it definitely means that an area around 11770 we need to keep an eye on. Well, here's this just for reference some Fib support levels. I don't know, if you're a scalp trader, maybe you could try to take very fast kind of if here we will get some kind of the ABCD retracement. Is currently cheaper to buy might be formed. So if you're interested with that, you could consider it. But this is beyond the scale of our report, because we are watching mostly for high time frames. We're most interesting what will happen around 11770 area. So that's probably enough for me for now. Let's keep looking and return back to this question on Thursday.